A very good evening to all of you. How are you all, guys? I hope I'm audible. I hope I'm visible. Welcome to the MCQ session on RBI Circulars. So we'll be discussing about the May 2025 ka circulars. Okay. Good evening, everyone. Good evening, Bhakti. So, guys, we'll be starting our class in 2 minutes. Okay. In 2 minutes, we'll be starting our class. Okay, great, Bhakti. Thanks for confirming. Okay, guys, let's start today's class. So first we will be discussing about the MCQs, okay, on the RBI circulars, and then we will be moving to the actual circular, right, and try to understand what's there in the circular, right. The first question for today: RBI released a framework to bring the transparency, stakeholders engagement, and accountability in the creation of regulations. Under this, draft regulation must be made for public comments and impact assessment are to be conducted before finalization. Which of the following is or are the true statements regarding the RBI's 2025 framework for formulation of regulations? So statements are in front of you, guys. Quickly read them and let me know which of the following is the correct statement. Which of the following is the correct statement which is mentioned here? The first statement is all draft regulations must undergo a public consultation process with a minimum 30 days feedback window. Option B is RBI is mandatory to respond publicly to the feedback and repeated consultation if final version differ materially. Option C, confidential and emergency wale regulations may bypass the standard process under the non-applicability clause. Option D, the framework covers the guidelines, standards, notification, orders issued under the various act. Option E, is this existing regulations framed without this framework are rendered invalid. What do you think, guys, should be the correct choice here? Everyone in the comment section. Here the correct choice will be option C. Confidential or emergency regulations may bypass the standard process under the non-applicability clause, right? The next one is the RBI's 2025 framework for formulation of regulation emphasize a transparent, inclusive approach to drafting financial regulations. One of the central tests is inviting the feedback from the stakeholders through a clearly defined public consultation process. Right? So this particular circular is based on the feedback from the stakeholders. Right? As per RBI's 2025 framework, what is the minimum timeline prescribed for public comments before a draft regulation is finalized? देखो 30 डेज क्यों नहीं हो सकता? समझना, इससे पहले वाला जो हमने क्वेश्चन किया था इसके अंदर भी 30 डेज लिखा हुआ था. दे हैव मेंशन्ड 30 डेज हियर, राइट? However, this option was wrong. Why? Because C was correct. So that means this option was wrong. So इसके अंदर 30 डेज तो नहीं हो सकता. Any other guess? The correct answer here is, guys, option B, 21 days. Okay, so 21 day timeline is being prescribed as per the circular for the public comments, right? Next is, to maintain trust and transparency, the RBI commits to acknowledging and addressing the public feedback. If the final regulation diverges significantly from the draft, the process of consultation may be repeated. So let's suppose if we have made a circular, which is a draft circular, okay, and then we have published a final circular. So when we published this draft circular, the things were different and the final circular is diverging significantly. It's completely different, or there are significant differences here, right? There are significant differences here if we compare it with the draft circular. The process of consultation may be repeated. What action is RBI expected to take if the final version of the regulation differs significantly from the original published draft? Yes, option A, repeat the consultation process. So if the final circular is different, substantially the different one, then we need to redo the things, right? We need to redo the things. We need to repeat the process. RBI's regulatory framework includes mechanism for examining the broader consequences of any proposed regulation before it is noted. According to the framework, what is the RBI required to conduct where feasible before finalizing any kind of regulation? What is RBI required to conduct where feasible before finalizing any kind of regulation? Why this circular? Why this draft circular came into existence? Impact analysis, okay, impact assessment, that's the correct option. Next is, not all the RBI regulations fall within the scope of 2025 framework. Some changes are exempt to allow the regulatory agility. As per the non-applicability clause of the framework, which of the following is explicitly excluded from the public consultation and impact assessment process? Of the following is explicitly excluded from the public consultation? Everyone in the comment section, what do you think? The correct choice here is, guys, option C, administrative rules. Okay, administrative rules are the ones, the internal rules or administrative rules. Internal rules or the administrative rules. You don't have to consult public while drafting the administrative rule. Why? Because that's RBI specific. Okay, that's RBI specific. Next is, to balance transparency with national interest, the RBI may bypass its standard consultation process under specific urgent or sensitive condition. Under which of the following scenarios is RBI allowed to skip or modify the standard regulatory formulation process? Under which of the following scenario RBI is allowed to skip or modify the standard regulatory formulation process? Again, a question which is related to the previous one only. Yes, the correct choice is all of the above. In the following situations are the non-applicability of the particular, this particular circular is there, right? These all the situations are falling in the non-applicability of this particular circular, right? So this particular circular was policy statement framework for formulation of the regulations, right? So this is a framework which is released by the RBI to standardize the process of creating and amending a regulation. Let's suppose RBI is drafting a regulation, is creating or amending a regulation. So there is no involvement of public earlier, right? There was no compulsion that you need to involve the general public as well. However, after this particular circular, you need to involve the stakeholders. You need to do an impact analysis, like what this circular might have an impact in the near future, what this circular can have a kind of impact in the near future before finalizing any regulation. So before actually hitting on the floor, this is a kind of impact analysis that we are doing in this particular guideline, right? The objective is definitely to enhance the transparency with public stakeholders input based on the proper impact assessment, right? So we need to, this framework will be applicable on all the regulations, guidelines, notifications, orders, standards, specification, whatever RBI is releasing, except the non-applicability list that we will be studying definitely. It will be applicable on each and everything, right? ये सब पे apply हो रहा है. रेगुलेशंस अब सबके अंदर आ गए, इन सारे एक्ट के अंदर जो भी आपके रेगुलेशन आते हैं वो सब आपके कवर्ड हो गए, राइट? The draft publication needs to be published on the RBI website, and you need to give the timeline for public comments, at least 21 days. This time limit is important. At least 21 days you need to give to the public for submission of their comments, right? And however, if the final version is significantly different from whatever you released on your website, right? As draft circular, whatever you released on your website is significantly different from the final version, then you need to redo the process. The RBI may repeat the consultation process. Now you need to post the final draft version again, give 21 days timeline, and then the public will respond accordingly, right? So you need to do here the impact analysis. RBI shall conduct a impact analysis before finalizing any kind of regulation. It's a better approach. Why? Because there is a space to do the assessment of impact. What kind of impact this circular can have on the banks, can have on the other financial institutions, can have on general public as a whole, right? So definitely there will be always a periodic review of the regulation that have been already made, right? Non-applicability of the clause, this particular guideline, this particular circular will not be applicable on the following things, and you need to remember this thing, right? Certain types of regulation that are internal in nature, administrative in nature, or organizational rules and regulation. Let's suppose there is an internal change in the RBI, right? There's an internal change, so why do we need to publish it to the general public, right? Why do we need a consultation for that? That's an internal matter of RBI, right? It won't be having any kind of impact on the public. Then why do we need any kind of public comments on that, right? Procedural update that don't materially change the regulation. So it's just a procedural update, and it's not at all changing the materially changing the regulation. Then there is no need for consultation, right? Regulations specific to one or few entities. Let's suppose there is a me specific change. Let's suppose there is only change regarding the HDFC bank. Then why do we need comments, right? Why do we need other entities comments? Because it's a person specific or an organization specific issue, right? There also it won't be applicable. So certain types of regulations here, it won't be applicable. Exceptional cases where RBI can skip or modify the process if there is enough confidentiality that is required to be maintained. It's a highly confidential thing. Then how can I ask for public comments, right? It's not possible, right? Public interest demands urgency. If there is a urgent need to do anything, then you can definitely do it. You can skip the consultation process. Objective would be defeated by following the usual process. If I follow the usual process, the entire objective of the circular will be defeated. Then also I can skip it. Emergency intervention. Let's suppose there is a urgent need to stabilize the rupee price, right? The rupee value. That's an urgent intervention. So in that case, again, RBI can avoid it. However, it should be an emergency intervention matter, right? So these are the things that are stated in the non-applicability, right? Saving clause, the existing regulation. Now this particular circular came effective as of May, right? There are so many regulations that have been made before May. So क्या सब पे consultation लेनी पड़ेगी? नहीं. This is for the upcoming regulations. The existing regulations will remain valid only. There is no problem at all with the existing regulations, right? However, if you are making any kind of new circular or guideline, then definitely you need to consult public and at least give them 21 days, right? So that's all about this particular circular. I have made summary pointers as well for you guys so that you can have a look just before the examination at a glance, right? Okay, guys, next. To enhance the foreign participation and liquidity in India, the corporate bond market. In the corporate bond market, RBI has removed restrictions under the general route. These relaxations were made under the FEMA Debt Instrument Regulations 2019 and updated in the Master Direction January 2025. Which of the following was a direct outcome of the RBI's relaxation for FPI in corporate debt under the general route? What do you think? Do let me know in the comment section. Okay. Any other opinion? Anyone? Bhakti is saying either C or E. The correct choice here is option C. FPI can now invest without any restrictions on the amount invested in a single corporate issuer. Okay, so they don't have any kind of restriction as of now. Earlier, they need to they need to invest up to a limit only. However, both the limits, single entity and the concentration limit, have been relaxed under the general route. So relaxation for foreign portfolio investors FPI investing in the corporate debt security via general route, the requirements have been completely relaxed. Earlier, the FPI are allowed to invest in the Indian corporate debt market through a general route, right? However, these investments need to have follow the two kind of key restriction. There were two key restriction. The first one was short term investment limit. There was a cap on the short term holding limit as well that are maturing in within 1 year, and there was a concentration limit as well. As of now, both the limits are now withdrawn, right? No such cap is there on the short term investment limit as of now. Plus, the concentration limit has also now been relaxed, right? So definitely it gives the FPI a greater operational flexibility and ease of access, right? Indian government wants more FPI, more foreign money to come in the Indian debt market as well, right? So that's why they have brought this change. Okay. So I have again given the summary pointers as well. Nothing much to discuss in this particular circular because everything is quite straight that they have just scrapped the limits, right? Next one is another important circular, the most important circular for your May 2025 that I can say, right? So definitely we'll be practicing a lot of questions on this particular circular because this is important from your examinations perspective, right? With the rise of app-based lending, the RBI has introduced clear definition under the 2025 digital lending directions. To distinguish between the digital platforms and the intermediaries, what does the abbreviation of DLA stands for in the context of RBI's digital lending guidelines? A very simple. Let's start with a very simple MCQ. Okay, Seva. So you have just recently joined. So definitely. So I have dropped the link in the comment section, right? You can definitely reach out if you do have any queries. Plus, you can also join the Oliveboard channel as well, right? I'm dropping the Telegram channel of Oliveboard as well. Please do join this group as well, right? So the first group is पहला वाला जो group है वो मेरा है, right? That's my group, the first one. However, the subsequent group is of the Oliveboard regulatory channel. So join that as well, right? You will get all the updates related to everything on these channels. Okay. Okay, guys. And no problem at all. So you have just joined, so I can definitely understand. It will take time for you to understand the things, right? So no problem at all. Gradually, everything will be sorted for sure. Okay. So even if you are not able to understand few things in the beginning, not to worry. We have covered everything from the scratch, very scratch. So in the course as well, you will find each and everything related to all the topics. And in case if you feel any problem, definitely you can always reach out, right? Okay. So the correct choice here will be option A, digital lending apps. Okay, digital lending apps is the correct choice here. That's the full form of DLA. I'll definitely tell you guys what is DLA, what is other things as well. To ensure accountability in digital lending, the RBI defines entities involved in the lending facilitation, but not the lending, but they are not lending themselves, right? What is the full form of LSP as per the RBI's digital lending direction? Again, a simple question. We'll also do tough questions, but let's start with the simple ones first. What is the full form of LSP? The correct option here will be option D, lending service provider, right? I'll also explain you the terminology. First, we'll be doing the MCQs because this is a MCQ batch, and then I'll be explaining you each and everything related to the circular, right? Through LSP platform, many customers are facing the task. Many customer facing task. The RBI has clearly laid down who holds the ultimate responsibility for borrowers' protection and the compliance as per the RBI guidelines, who bears the full responsibility for the actions and conduct of the lending service provider, which is LSP. Who bears the full responsibility? Look, there is a terminology regulated entity, there is a terminology LSP, which is lending service provider, and then we do have DLAs, digital lending apps, right? Digital lending apps. So what happens here is RE, which is a regulated entity, is nothing but banks and financial institutions. We call them as RE, regulated entity. Descriptive finance. Look, if you are attempting mock test, then definitely they will be checking the mock test as well. However, if you are talking about the practice question, then no provision of checking the practice question is there as of now, right, Siva? If you are attempting the mock test, then definitely they will be checked by the experts, right? However, if you are facing any kind of issue, you can always ask me. So regulated entities are banks and financial institutions, right? Now let's suppose HDFC Bank, that's a regulated entity, right? They have done a tie-up with, let's suppose, Paytm. So in that case, LSP, lending service provider, will be Paytm. So it's the Paytm's responsibility to bring clients. Now Paytm in itself cannot give the loans and advances. However, they are just acting as a lending service provider. They are acting as a service provider. That's why we call them as LSP, service providers, right? So what Paytm is bringing to the table, they are bringing customers. HDFC Bank will directly grant the loans and advances, right, to the customers. However, the customers are being brought via Paytm, which is a lending service provider. Now, how can somebody contact Paytm? Do I need to go to their office? No. I will be contacting them via DLA, which is digital lending applications. So if I talk about the Paytm mobile app, that's a digital lending application, right? It's so simple. So DLAs are nothing but the application interfaces of the LSP. LSPs are nothing but the service provider. They are just bringing the customers to a regulated entity, which is nothing but a bank only. So let's suppose I have taken a loan I contacted Paytm via digital lending application, Paytm app, and I have taken a loan from the regulated entity, right? Who bears the full responsibility of actions and conduct of the LSP? If I talk about this LSP, who is responsible for each and every act of the LSP? Definitely the regulated entity. The RBI will ask the regulated entity, inquire the regulated entity in case of any problem, right? In case of anything, any situation that comes up. In the meanwhile, definitely the regulated entity will be having the ultimate responsibility here. Please do remember this thing. Okay. RBI emphasizes ethical digital lending practices and requires all the matched of or loan offers to be displayed transparently, avoiding manipulative design tactics. While presenting the matched loan offers through DLA, RBI mandates that LSP must void which of the following? LSP must void which of the following here? Dark patterns, right? And what are dark patterns? Any idea about dark patterns, guys? What do you guys mean by dark patterns? What is dark pattern? No idea about dark patterns? Yes. Deceptive designs that manipulates user. Let me just give you an example. Let's suppose you are buying an insurance. For example, so the LSP or the DLA, direct lending app, nothing LSP, DLA is nothing but the application of the LSP only, right? So they have diverted you to a platform. So this is your insurance, 10,000 rupees. However, there are some add-on riders, additional riders. Let's suppose accidental rider, right? So when you arrive at this page, everything is already check on. There are ticks on each and every checkbox, right? Now that is a dark pattern. That's a dark pattern. Why? Because ideally you should keep them empty. You are just kind of deceiving the person to take the add-on rider as well. I don't want to take this rider. However, there is a by default tick on the rider as well. That's a deceptive practice, right? That's a false practice, and we call them as dark patterns, right? So RBI is mandating LSPs to avoid the following what dark patterns. Do avoid the dark patterns. Next is to maintain the discipline, financial discipline, and restrict over dependence on the credit enhancement. RBI has introduced limits and rules on the DLG arrangements. What is the full form of DLG as used in the context of fintech lending? What is the full form of DLG? option B, which is default loss guarantee, right? Default loss guarantee. So sometimes what happens is, let's suppose the LSP, which is the Paytm, is bringing client for RE, HDFC Bank. So sometimes what happens is, because the RE is giving the loans to the customer, sometimes LSPs are providing the DLGs. What are DLGs? Default loss guarantee. Let's suppose if customer is defaulting on this loan, then Paytm will bear the loss. That's nothing but default loss guarantee. If the customer defaults, I guarantee you to pay the loss. I will pay for your loss. That's default loss guarantee. If this customer defaults, the RE will suffer a loss. So I guarantee as LSP, I'll definitely compensate for your loss. That is called as DLG, default loss guarantee. Okay, that's nothing but DLG. So DLG arrangements are limited to a percentage, fixed percentage of disbursed loan. Now you cannot just keep on giving the DLG. There is a fixed percentage limit on it to avoid the excessive risk of outsourcing to the third parties. What is the maximum cap prescribed by RBI on default loss guarantees in fixed loan portfolio? Yes, the amount is 5% of the disbursed amount, right? 5% is the limit. Do remember it. That's the maximum DLG. Next, a digital lending platform aggregates offers from multiple REs and present them to the borrowers. It uses an algorithm to rank loans offer, but the algorithm gives preference to lenders that pay high commissions. As per the RBI directions, which of the following are the violations? Ranking based on the undisclosed commercial incentives, failure to disclose the ARP, penal charges, and lender's name, use of pre-ticket acceptance boxes, not providing a link to KFS, key fact statement, for each offer, or all of the above as per the circular. All of the above, right? All of the above. These all are nothing but dark patterns only. So dark patterns, non-transparent ranking, failure to show any kind of full details, not linking the KFS, right? These all the things are violations of the RBI guidelines. Next is a borrower raises a complaint about an unauthorized charges applied on the digital loan. taken through a LSP. So I am a borrower. I have taken a loan through LSP, let's suppose Paytm mobile application. The RE forwards the complaint to the LSP and marks the case as closed after the LSP sends a reply. The borrower doesn't receive any kind of response for 25 days and then receives a rejection from the LSP. The borrower is unsure of what to do next. As per the RBI's guidelines directions, which of the following will be correct here? So I have taken a loan from HDFC Bank. There are many unauthorized charges that have been applied on my loan. So I raised a complaint. The RE, which is the HDFC Bank, forwarded that complaint to the LSP. And the borrower, me, I didn't get any response for the 25 days. For 25 days, I didn't got any kind of response. So then receives a rejection from the LSP. In this case, what will be the correct choice? Options are in front of you. What will be the correct choice here? Look, the correct choice here will be option D. The RE must take the full responsibility. Negligence of the LSP won't transfer the RE's responsibility. Ultimately, the full responsibility lies with the RE only, right? So RE must take full responsibility and ensure the contact details of its nodal officer are publicly available so that the concerned customer can raise the complaint ahead, right? Option D, RE is fully responsible always. Next, a fintech entity structures. So these are complex questions, guys. Okay, if you are not able to answer it directly, right, or if you are struggling with it, no problem at all. Everyone will be struggling with it. You need to read the circulars again and again, right? And that's the only way. And definitely, we'll be having a look at this circular as well in the coming few minutes. Okay, after these MCQs. A fintech entity structures a loan product for MSMEs and claim it as its DLG arrangement is risk-free because it's backed by Central Credit Guarantee Fund Trust for micro and small enterprise. It's backed by CGT MSE. Okay, so they have told that their DLG is backed by a organization CGT MSE. Another arrangement is backed by the International Monetary Fund. So one more arrangement again was backed by the IMF. The regulated entity insists on reporting these as a DLG linked exposure and includes the coverage in its capital calculation for mitigation. Which of the following is correct based on the RBI's direction 2025? Quickly have a look at the options. This particular thing is also there in your circular. What do you think, guys, should be the correct choice here? The correct choice here is option E. The guarantees under the CGT, MSE, IMF, and multilateral banks are totally excluded from the DLG classification. So you need to exclude these guarantees from the DLG classification. अब ये वही आंसर कर सकता है, only those can answer who have read the circular thoroughly, right? Next, XYZ NBFCs. So these are basically moderate to high level difficulty questions. XYZ NBFCs enter into a direct lending partnership with an LSP, lending service provider, where the total disbursed loan portfolio under the arrangement reaches 60 crore. The LSP offers a DLG cover from the form of bank guarantee worth rupees 6 crore. So 60 crore is the arrangement amount, out of which the DLG cover that they have been issued is 6 crore. The RE is accepting it and consider the risk on the portfolio to be mitigated. A default of 4 crore occur in the portfolio. So there is a default of 4 crore now. So the DLG will be activated. Default loss guarantee will activate, right? According to the RBI's digital lending direction, which of the following is the correct choice? First, tell me what can be the maximum amount of DLG in terms of percentage that we can give. उसके बाद you will be able to answer this question easily. So what was the percentage of DLG, maximum DLG that was allowed? It was 5%, guys, right? It was 5%. Here the correct choice will be option A. The accepted DLG amount of 6 crore violates the RBI norms. Why? Because DLG you can only give up to 5%, right? In this particular provision, the amount is 60 crore and 5% of 60 crore is 3 crore. However, you have given a bank guarantee of 6 crore, that is just the double of the prescribed minimum. So it's violating the RBI norms here, right? It's violating the RBI norms here. Why? It's more than the prescribed bare minimum, right? Next, an NBFC launches two lending apps in collaboration with the fintechs. One is self-owned and the another is operated by the LSP. The NBFC fails to report the second app to the RBI. During an inspection, it was found that the unreported app lacked grievance redressal information and did not link to the RE's website. So it was not at all linked to the RE's website as well. The chief compliance officer argues that since the LSP operated it, reporting was not their duty. As per the DLD guidelines, which of the following will be true? Which of the following will be true? No problem, Bhakti. You can take rest and definitely you can watch the lecture later on, right? If you're not feeling well, definitely you can watch the recorded session as well, right? So last ke 10 to 20, 20 to 20 minutes, you can watch the recorded lecture, right? Okay, so take care. Okay, bye bye. Take care. Okay. So here the answer, guys, will be option E. The RE must report all the DLAs via CIMS portal. So there is a CIMS portal. The regulated entity needs to report all the DLAs via CIMS portal, and that's compulsory, right? That's compulsory. Next is ABC Fintech operates a digital lending platform and offers instant credit card based EMI loans to the users. It enters into a DLG arrangement with a group of LSP and also claims that loans offered via its platform are DLG backed. A senior manager is now arguing that since these products involving formal documentation and credit scoring, the DLG is permitted under the RBI norms. According to the RBI's digital lending directions, which of the following combination explicitly barred from DLG arrangements? It's a direct question from the circular. Okay, it may look typical, however, this particular question is a direct from the circular. If you find it tough, definitely it can be because maybe this particular part you have not covered yet, या फिर मे बी आप भूल चुके हो. Here the correct choice is option B, credit card products, P2P platforms and government guaranteed loans. They are combination explicitly barred from the DLG arrangement, so they don't need to enter into any kind of DLG arrangement. They are not at all allowed for the DLG arrangement as per the circular, right? Next is a commercial bank enters a DLG arrangement with a fintech partner. Here the commercial bank like HDFC has entered into a DLG arrangement, a loss guarantee, default loss guarantee arrangement with a fintech partner. A batch of loans under this arrangement starts defaulting. The bank waits for 6 months. So the bank has waited for 6 months before taking any kind of action, hoping to recover from the borrowers directly. Eventually, it tries to invoke the DLG on the 190th day of the original due date. So what happened here? Default happened on this particular date. The bank waited for 190 days and then invoked the DLG, then invoked the guarantee on the 190th day from the original date. The fintech contests the claim citing the expired invocation window. Which of the following accurately reflects the RBI's requirement regarding the maximum period to invoke DLG? Look, if the borrower has started defaulting, you need to timely invoke the DLG, right? You need to timely intimate the LSP that the borrower has started defaulting. So, as per the DLG arrangement, you can definitely recover your money from the LSP. So, what is the time period within which you need to invoke the DLG, within which you need to invoke the guarantee? What is the time period? What is the time period? The time period here is 120 days. Okay, 120 days from the loan becoming overdue. 120 days from the loan becoming overdue. Next is the 2025 digital lending directions introduced strong consumer protection norms, especially in their data privacy and technology standards. The borrowers now have specific rights related to consent and data deletion and data localization rules as well apply to the regulated entities. Which of the following is not mandated under the RBI's 2025 digital lending guidelines? Which of the following is not mandated under the RBI's 2025 digital lending guidelines? The correct choice here is option B. LSP can collect biometric data for underwriting if explicit consent is obtained, so they don't have to get the biometric data. This is not at all a mandatory requirement under the RBI's 2025 digital lending guidelines, right? Next is the RBI has clarified that default loss guarantee DLG must be backed by permissible instrument. It can be cash, it can be FD with lien or any kind of bank guarantee, capped at 5% of the loan pool that we have already discussed. Moreover, disclosure, tenure, and capital treatment are tightly regulated under the RBI guidelines. Which of the following correctly outlines the capital and disclosure requirements for DLGs? Which of the following correctly outlines the capital and disclosure requirements for DLGs? The correct choice here is, guys, option B. LSPs must disclose the number of DLG covered portfolios monthly. So they need to disclose it monthly. That's the correct choice here. LSPs must disclose the number of DLGs covered portfolio monthly. They need to report it monthly. And the last question from this particular circular, RBI's 2025 digital lending directions introduce strict norms for disbursal and repayment to ensure transparency and reduce the misuse by third parties. Which of the following statements are correct regarding the disbursal and repayment of the digital loans under the RBI's 2025 guidelines? So here we need to identify which of the following statements are correct. The first one is loan amount must be disbursed directly into the borrower's bank account. That's correct. The regulated entity will be directly depositing the loan amount within the borrower's bank account directly via no intermediary, right? It should be direct. Option B, REs may use LSP controlled escrow accounts for collecting the repayments in exceptional cases. There is no such requirement as of now in the circular. No escrow account related requirement is there in the circular. The cash repayments are allowed only in delinquent cases and must be recorded on the same day. So this kind of requirement is there in the circular. Pass-through accounts operated by LSP may be used with the borrower's consent. No. There is nothing like this in the circular related to the borrower's consent. Processing fees may be deducted before crediting the loan amount of the borrower's account. It's not the case, right? So the correct answer here is A and C. Option A and option C are the correct choice here, right? Rest of the statements are not true. So these were the MCQs from the RBI Digital Lending Directions 2025. And as I have already exceeded the class timings, I'll conclude here for today. In the part second of the May 2025 RBI Circular MCQ series, I'll definitely be discussing about this circular as well. As of now, we have done the MCQs. In the next class, we'll be discussing about the basics of this circular as well, right? We'll be discussing about this circular as well and the rest of the circulars. Okay, so as of now, that's it for today, guys. Thank you so much for attending the session. Please do participate. Please try to read the circulars, right? I'll also discuss in the coming classes, coming class regarding this particular digital lending direction as well, right? I'll definitely upload this PDF as well, so try to read it before the class. That's why you will be able to gain a better understanding like how the MCQs, what kind of MCQs can come up in the examination. So thank you so much for today, guys. Bye bye, take care. I see you soon in the next class of RBI circular. We'll be having a lot of discussion related to these circulars from May month. Okay, bye bye, take care.